Here again with Smart System. In our last lesson, we looked at the retail sales number, an indicator which gives us insight into personal consumption, the largest category of GDP. In today's lesson, we're going to look at another market moving indicator which gives market participants insight into growth, or lack thereof, in the manufacturing sector of the economy, the Institute for Supply Management's Manufacturing Index. So let's get started. Reported on the first business day of the month, at 10 o'clock a.m. Eastern Standard Time, the Institute for Supply Management, or ISM Manufacturing Index, is comprised of several different sub-indices, the 5 most important of which are the Production Index, which gives insight into industrial production, the Prices Index, which gives insight into the Producer Price Index, and this is important inflation gauge, which gonna cover our next lesson, a New Orders Index, which gives insight into factory orders, the Employment Index, which gives insight into manufacturing employment, and the Supplier Deliveries Index, which is an important component of the leading economic indicator index. Another important indicator which is designed to predict future growth or lack thereof in the economy. The sub-indices and therefore the headline number are derived by national, monthly survey of purchasing executives at several hundred industrial companies. As part of the survey, these influential manufacturing executives are asked a series of questions to gauge the level of growth, or lack thereof, their companies are experiencing. In the above components in response to these questions, the executives can give only one of 3 answers, which are better, the same or worse as stated on the ISM's website. Once these questions are received, the ISM indexes are calculated by taking the percentage of respondents that report that activity has increased, or in other words respond with better, and adding it to 1/2 the percentage of that report that activity has not changed. In other words, that respond with the same, using half of the same percentage, effectively measures the bias towards a positive, above 50% or negative index. As an example of calculating the index, if the response is 20% better, 70% same and 10% worse, the index would be 55. That's how it will be calculated there. The math isn't so important here, but the 2 things that it is important understand about this index, or that readings above 50 indicate an expansion over the previous month. In the component indexes or the overall manufacturing index, if you're looking at the main number there, and our reading below 50 indicates a contraction. Generally, releases which beat estimates to the upside will rally the markets, and releases which beat us or which come in below estimates will result in market sell-offs. This is especially true and moves can be especially large around turning points in the economy where uncertainty reigns, and a leading indicator such as this carries a lot more weight. Although the US economy is now primarily a service-based economy, the ISM index is still one of the most important, and therefore market-moving indicators for several reasons. Firstly, although no longer a dominant part of the economy, manufacturing still plays a large role. Secondly, the prices paid and employment components of the indicator give a read on what's happening with inflation in the labor market, 2 very important components of the economy. Lastly, and perhaps most importantly, is the fact that before goods are sold to businesses and consumers, they obviously have to be manufactured. So this is in general the first area where signs of strength or weakness in the economy tend to show up. The ISM Manufacturing Index is therefore considered a leading economic indicator, or one with predictive powers on what's going to happen over the next several months with the economy, and therefore a lot more weight is going to be placed on it by, rather than indicators that are giving indication of current or past things. So unlike many of the other releases that we've covered or will cover, the report issued, along with the ISM manufacturing number, is very easy to read. It's important to follow the release in real time for several months to get a feel for what the market is focused on at the time, because how it reacts is going to change depending on where the focus is in the economy and the markets at the time, and then you can begin to anticipate market reactions under different scenarios and incorporate that into your trading. That's our lesson for today, and our next lesson we're gonna turn our attention to some of the indicators, which focus more on inflation than economic growth, starting with a discussion on the Producer Price Index. So we hope to see you in that lesson. As always, if you have any questions or comments, please leave them in the comment section. Have a great day.